Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Looking at CMG, SKX, NKE, and TWTR on the daily and weekly time frame. So a gap up open in reaction to the earnings for CMG, and then it was all bear all day, and we closed down near the low. Huge bearish engulfing candlestick on big bear volume, bearish MACD cross. So we're not getting a break on the trend, the downtrend on the weekly time frame anytime soon. All the momentum is favoring the bears, but we do still have a bunch of support to be watching. The next level I'm looking at is 400 psychological. We have the 100-day moving average lining up at that level, and the low of consolidation from mid-January was 399.03. So 400, then I'm looking down at 392, and then all the way down to 372.87. So everywhere we formed a higher low, that's going to be support on the way down. So obviously the bears have control of momentum, closing down near the low on big volume. And here on the weekly time frame, we are rejecting from the 50-week moving average resistance for the second week in a row, but we're watching this higher low pattern that is still intact, and we can even draw an uptrend line here to be monitoring the strength of this uptrend. And if you use the real body of the candlesticks, that's where the uptrend line is. So we still have a lot of wiggle room before that level is even tested. So the overall downtrend absolutely still intact, lower highs and lower lows. We almost got up to 440 resistance here, but we rejected from the weekly upper Bollinger Band and closed at the low of the week. SKX, the gap has filled. Our target has been hit. So rejecting from the 200-day moving average resistance, pulling back significantly, and that gap was at 2309, and we hit 2310, the low of the day on Friday. So you can't trade in between those two numbers. So as far as I'm concerned, that gap has been filled. It's a bullish reversal doji holding the 100-day moving average support. So a green day on Monday, we will be looking for some short-term upside now that that gap fill target has been filled. Weekly time frame, middle Bollinger Band support is holding 2340. If we lose that level, we look to the 200-week moving average down at 2214. So the longer-term downtrend is still in play here, and we can even draw a couple trend lines here. The first major trend line that I'd be drawing that would need to break before I would even consider looking bullish long-term here would be all the way up around the low 30s, but we can draw a steeper downtrend line where I would be putting it at the top of this spike and hitting the lower highs. That's where I would be watching this current downtrend. So we've rejected from it 1, 2, 3 lower highs, and now pulling back. Bulls trying to hold moving average support, but again, expecting short-term upside if we can see a green day Monday to confirm that indecision doji at the bottom of this pullback. NKE continues to see some weakness, so we broke the higher low pattern. Now we have a lower high, and we're going to see if we get a lower low. We're looking down at support of 51.63. We have some moving average support in the low $52 range. The 50 and 100-day moving averages are down there, but our target is the gap fill down here as well, 51.33. Long-term NKE is absolutely a bear. It's been a very long downtrend, but we are holding the middle Bollinger Band support on the back test, 51.90. So that's a key level to be watching. 54 is our clear resistance. Middle Bollinger Band weekly support continuing to hold, or at least starting to hold on the first couple back tests. It's still descending though, so we're going to have to keep an eye on that level, and we can draw an uptrend line. All of these charts have some clear trend lines to be watching, and I would be drawing this uptrend line right there, hitting the lows of the real body of the candlesticks, and we did hit the low of the week right off that uptrend line. So I started at the real body on the last bottom candlestick and make sure to hit every low of the real body, but none closing below it. Last we got Twitter. Twitter had some rumor news getting some fuel to the upside. So from here we have a higher low and a higher high trying to reverse the trend short term, But we would really have to get above 1984 to make any big significant progress in the overall trend, which is very significantly away from where we currently are, over 10%. So we're seeing a tightening range, an inside candlestick on Friday compared to Thursday with a range of 1744 and 1785. And I'm going to be watching the middle Bollinger Band weekly resistance of 1828. And that's because we had a bunch of rejections from this level back in October and November. Did close above it once, but that did not last long. If we reject from that middle Bollinger Band resistance, we'll be looking to head back down towards 1633 support. So we can see the bulls had some upside here back in October, November, December that led to a lower low, and could be a similar kind of pattern playing out now. Bulls trying to hold up before continuation to the downside, because the bulls haven't really done much besides May to October. There was a ton of upside with all kinds of rumors. Every different company in the world was getting named as a potential buyout candidate. But now since then, it's been lower highs and lower lows. So certainly those rumors didn't stick. And the question is going to be, how much upside can these rumors have? It's really never really seen a stock like this just react to rumors time and time again all year. And we don't even know who's putting them out half the time. So that's what we're looking at for these names. Lots of bearish longer-term setups, which are continuing to play out even though the market's at all-time highs. And I hope you have a great weekend. Thanks for watching.